What's up, income investors? Adrian here, and today I wanted to make a quick video on the Boston Pizza Royalties Income Fund. So definitely a lesser known Canadian stock on the TSX out there. So for those of you who don't know, Boston Pizza is a Canadian restaurant franchise business, and they currently have about 395 locations, mostly in Canada, but also some in the US and Mexico. So the Boston Pizza Royalties Income Fund, the stock symbol, by the way, Bpf.Un on the TSX, is the fund where all the franchise royalties go, just like the name says. And in turn, these royalties are distributed to us, the investors, in the form of monthly dividends. So at the beginning of the COVID-19, many restaurants were required to close their doors, and Boston Pizza unfortunately was one of them. This caused a huge stock price drop, and consequently they had to suspend their monthly dividend payouts starting in April of this year. They didn't really have a choice. But on October 1st, they announced that they would restart the monthly dividend payments. The next day, the stock jumped 43%. And yesterday, on October 5th, the stock went up again 7%. And so far today, the stock is still in the green. So if you want to really have a good chance of doubling your investment in the next couple of years and make 9% interest while you wait, then you should pick up some shares right away. So here's the news article, guys, taken directly on the news page on the Boston Pizza Royalties Income Fund. So as you can see, that what the headline says, they're restarting the monthly distributions at 6.5 cents per unit beginning with September 2020. So which is always 1 month delay to actually pay out the dividend. So the dividend is going to pay out at the end of this month. So if you scroll down and take a look at a little bit at the restaurant sales now, throughout the past several months, the business of Boston Pizza restaurants in the fund's royalty pool has improved. Franchise sales and the resulting royalty and distribution income for May, June, July, and August 2020 were approximately 45%, 67%, 81%, and 84% of the level they were in the same months last year. So I was quite surprised to see already they're making 84% of what they were doing last year. That's actually pretty good. So if you look at the CEO's comments, we are encouraged by the continued improvement of Boston Pizza restaurants in the royalty pool. In deciding to reinstate monthly distributions on units at 6.5 cents per unit, the trustees of the fund considered, amongst other factors, the recent financial performance on the fund, blah, 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 blah. And at the end, it says, with the view to ensuring the payment of regular monthly distributions at a sustainable level. That's the key. So it goes on to say that to the extent that the trustees determine that after paying monthly distributions, the fund has any additional cash available for the distributions of 2020, the trustees will consider declaring a special distribution in December 2020. So there you go. Basically what they're saying is that they're restarting the dividend at a sustainable level, at a pretty conservative level, and if they have excess cash, they will declare a special distribution, which is kind of like a bonus dividend in December 2020, which is great. So let's check out the 1 year chart now, as well as the dividend history real quick, and then I'll give you my two main reasons why I think you should invest in this stock right now. So here's Boston Pizza, guys. The market's about to close today on October 6th, and it's still up again 3 days in a row, but only slightly up 4 cents. So if we scroll down and check out the dividend information, as you could see here, the annual dividend is 78 cents. So that's 6.5 cents times 12. And the dividend this month is going to be paid on October 30th. So if you want to qualify to actually get the dividend, you have to buy the shares 1 day prior to the X date, which is October 20th. So you need to buy the shares by October 19th if you want to get the first dividend. So if you look at the 1 year chart here, you could see that the stock was about $15-16, and then bang, COVID happened. As you could see, it fell off a cliff here and remained relatively stable, and then this pop here is the last couple of days of when it jumped 43%. So if you look at the 1-year high of 1741, right now we're at $8.34. So still a long way to go. It's still less than half of the 1-year high. And if we look at the 5-year dividend yield, dividend calendar, you could see here that in 2016 the annual dividend was $1.38 all the way until February of 2020, when they had a small reduction to $1.22, and the last one was in March. After that, it was suspended until now. So the new one here of 6.5 cents translates to once again an annual dividend of 78 cents. Let me summarize why this is a good investment in my opinion right now. Number one is, of course, the nice high dividend yield of over 9%. So don't forget, this is like an interest rate, so over 9% is just fantastic. Not only is it high, but I think it's very sustainable. It's actually a 36% reduction of what it was prior to the dividend suspension. Like we saw before, it used to be $1.22 annually, and now it's 78 cents. So considering the fact that they're already hitting about 84% of the business they were doing of last year, I think it's a pretty conservative and sustainable dividend rate. I think they were smart not to reinstate a dividend that's too high, because although the worst is probably over with COVID-19, it will still impact restaurants in the foreseeable future. Like we're seeing in Ontario and Quebec, the second wave is upon us. COVID cases are on the rise. And in Quebec, restaurants had to shut down their dine-in operations for the month of October. So Ontario might follow suit. Luckily, Boston Pizza still has some revenue with their takeout business. So reason number two is the stock price appreciation potential. So although I'm an income investor who just buys and holds stocks, and I don't really care about the stock price, I just care about the dividend, I still think there's potential for the share price to rise significantly over the next few years. So even with the recent pop the stock had, it's still less than half of its 1-year high of $17.41. So a lot of room still to grow. So put those two facts or two reasons together, and you got yourself a really good investment in my opinion, because no matter what, you will get paid while you wait. Also, there's a chance, like we saw, to get a special distribution, so a bonus dividend in December. So think of that as a nice little potential Christmas present. So let me know if you agree or disagree, guys, with my reasoning. I love reading all your opinions and answering all your questions, which keep increasing as the views and subscribers increase. This makes me very happy because people are starting to take control of their own financial destiny, something many people ignore until it's too late. So stay tuned for more content, guys, on dividend stocks and strategies specifically designed for income investors who want to build a nice stream of passive income. My mission remains the same: to help everyday Canadians create an easy and growing stream of passive income to improve their quality of life. So with that, take care and see you next time.